Hello, everybody. I'm Laura Peterson. I'm your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you'll want to call 407-566-2555. That's 407-566-2555. Wow, you would think I would know the phone number right, but apparently I didn't right there. So anyway, wanted to get started with the stats and what's going on this week. And of the single family homes, there were 279 that sold last week, and that's down from 350 the week before. As you know, the last week of the month, there's always a lot more going on, and so that's why that was quite a bit higher. We're still a little bit lower than what I'd like to see, but we're ramping up at the new year is kind of what's going on. When you break down that 279, there were 32 of them under 250. 18 between 250 and 300, 66 between 3 and 400, 59 between 4 and 500, 78 between 500 and a million, and 26 over a million. Now our median price of the single family home is $430,000, which I believe it was about $425 last week. So it's up just a tad from there. And the inventory increased by another 103 homes. So that just means that we didn't, that's 103 more than what were actually sold last week is what happened with the inventory. So what we're looking at in inventory is 6.49 months of inventory. Now a normal market is somewhere between 4 and 6. So we're totally heading into that over into the buyer market is really where we're going. But the list to ask price ratio is staying pretty good. It's still at 96.33. Under 250, it was at 87.49. Then it's at 97, almost all the way across the board until you get to over a million, which was at 95.32. So that's really similar to what it always is. Under 250 and over a million, you get to negotiate a little bit on your price, but outside of that, that's not what's happening. On the condos, townhomes, and villas, there were 85 of them that sold last week. It was 90 the week before, so really not a whole big difference when you're looking at that. So what the scoop is on those where they're at, under 250, there were 27 of the 85. 15 between 250 and 300, 24 between 3 and 4, 7 between 400 and 500, 9 between 500 and a million, and 2 sold over a million. So when you're looking at months of inventory there on the condos, townhomes, and villas, you're at 11.34. So definitely a buyer's market when it comes to that. So again, the median price increased, however, to $299.9, which was just a small change because it only went up 1.3% from the week before. So staying pretty consistent. But, when you're looking at 11 months of inventory, basically we are definitely in a buyer's market. So when I'm working with condo owners, that's what I'm telling you. You've got to be aggressive when you're looking at that. And everything is local when you're looking at real estate. So if you're trying to decide, what to sell your home for, you really got to look at what's going on in your particular subdivision, in your particular zip code, school district. All of those things make a difference in order to let you know what's the best place to go and the best place to be. Basically, the final list to sale price, though, was at 96.81, so pretty similar to the single family homes. 94.08 was under 250, and 95.66 was over a million, and then everything else was at 97 in between. So that list to ask price ratio is very similar to the single family homes, but basically there's a lot of things that are going on when you're looking at real estate and everything that's happening out there. So our market is very consistent in regards to the number of properties that are selling. And one of the things that I found basically that was going on this week is that they were saying that 17% of the people out there actually have a home that is going through all of my little material that I have here, but 17% of the people out there have a mortgage that's 6% or higher. And so that's really changed over the last few years, because the last few years the mortgage rates have been there. So 17% of the people have an interest rate that's 6% or higher. So that means that of the mortgaged homes that are out there, there's still a huge portion, 83%, that are looking at somewhere in that neighborhood of, maybe 3 or 4% or 5% and that kind of stuff. Well, actually, it shows us right here on here. There's 21.3% of the people have mortgages that are below 3%. So that those people need, really want to move. I recently sold a house a couple of weeks ago that the property did have a 2.5% mortgage rate, and the new buyer was actually able to assume that loan. So that might be something that you could do if you do have a home that does have that interest rate. If you've got a VA loan, or if you have an FHA loan, those are the most assumable loans that are out there. Below 4%, 55.2% of all of the loans have a rate of 4% or below. So if you subtract that 21.3 from the 55.2, you're looking at basically 34% are in the fours is what's going on with that. And then below 5%, you're at 73.3% of the people are below 5%. And that is, so another 18% of the people are in the fives. And then below 6%, is 82.8, like I had mentioned. And so that's another 9% between the 73.3 and the 82.8. 9.5 basically are the people that are in the sixes. And then you've got the people that are above that. So basically, that is important. I think that has really slowed down our market a little bit as time goes on, that people are looking for something that is a little bit better when it comes to their interest rate and everything. So there is the ability to buy down. So that might be something that you want to do. I was working with a buyer this week that we're talking to a builder, and they're buying down the rate, but sellers can offer a buy down rate and everything as well. So one of the things that is kind of popular is a 2-1 or a 3-1 buy down, which it buys down the rate just for a small period of time, so maybe a year or two. And so it just depends on what you're going to do. So you're kind of, working on the interest rates to see when they're going to go down and what you can do with them and everything with that. But basically, it's something that you want to look at when it comes down to what's the best thing to do, for you and your family and everything. But if you are going to buy those interest rates down temporarily, you do still have to qualify at the higher rate if it's not a full-term buy down. So if they say it's like a 2-1 buy down, then that's buying down the interest rate for a couple of years. At the first year, it's 2% lower. The next year is 1% lower, and then it goes to the regular rate. So that buys you some time if you think that the interest rates are going to go down, that you can actually get that. If you think that the interest rates are, but you do, like I said, you do have to qualify at what that higher rate is as time goes on. So you have to qualify for that now. So they make sure that you're not going to get in trouble later, is what I'm trying to say. So it's kind of a win-win situation if you do that. So there are options if you do want to look into that, and full-term buy down as well. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. I'm Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I was looking at some things, and there's some other stats out there that I think are really interesting in regards to what's going on in the market today. And in the fourth quarter of 2024, Florida had 60.7% of equity-rich homes, and that's down from 62% in 2023. And basically, Miami-Dade had 64.4%, and there are a few underwater properties statewide. So basically, what that means is that that there are approximately 60% of the homes have 50% more than the property, or worth more than the outstanding mortgages. And so I think that's pretty awesome in regards to what's going on. And usually if you bought your house, I would say before probably 2021, you definitely probably are not underwater and you've got quite a bit of equity. I mean, the properties went up quite a bit in 2020, 2021. And so as a result of that, the homeowners have quite a bit of equity in their home. Now, the bottom line, what is great about that is that the situation is that probably if you are late on your payments or you've run into some kind of major life challenge that you think that you're going to lose your home, you actually would be much better off selling it on your own and putting money in your pocket. I know that there are a couple of foreclosure sales that are coming up next week that I'm working with one of my clients on, and they're trying to get the house at the foreclosure sale. And basically, when I look at those properties, there is equity in the home. So they could sell it on the open market and walk away with money in their pocket instead of actually going to the foreclosure sale. So basically, they're still kind of in control a little bit up until next week, but not a whole lot. They don't have a lot of time, obviously. So they've got to come up with that money and get it to the bank before the foreclosure sale happens, which is Tuesday. And this is obviously the weekend, and Monday is President's Day. So the sale is at 11 o'clock. So it's going to have to be that they've got that money before that sale happens, which is going to probably be really tough to stop it. But if you're in that position and your sale isn't on Tuesday next week, I think that we could really help you. And so that's something that I think a lot of people need to know, and that if you are in a tough situation, that there is a way out and a way that you can be helped. And that's really, what I'm up for doing and love to do, is help people out of, their situation. So it's a win-win situation. So if you are going through a tough time, maybe you lost a job, maybe there was a death, maybe there was a divorce, there's all kinds of things that happen that cause problems for people. And so as a result of that, I'm always coming from, what's the win-win situation? What can we do here to make things better for people? And so we definitely want to do that. And Florida is leading the country in regards to what people have in equity. And so I think that that's really great and good for people to know and people to do. And so, even if you're going through a short sale, it's better than going through a foreclosure. You don't have as much time that it dings your credit when you go through a short sale versus a foreclosure. So what I want to tell people is that there are options out there for you, regardless of what your circumstances are. And you might even have a situation where you have an assumable loan that might be something that is beneficial to somebody and everything as well. So the thing to do is to not sit back and not do anything. The best thing to do is to get advice on it. And so that's really what my word of advice is that you probably want to, reach out to somebody to make sure that you can find out what's going to work out for you, what's the best thing that you can do. And maybe it is going through the foreclosure. I doubt it. But, it's just knowing what your situation is and how to handle it. And because you don't deal with this stuff every day, it's a tough thing to know basically what to do. Another thing that I found that's interesting about Florida is that Florida has the built-to-rent leaders. We're one of the build-to-rent leaders. So I've talked about this before a year or two ago, but basically if you're not ready to buy, you can rent the American dream for the time might be the next best thing. So as rapidly rising home prices, discouraging down payment amounts, and daunting mortgage rates keep many on the sidelines, the build-to-rent sector is swooping up to save the day. They offer renters not just options, but peace of mind. So it's the flexibility of renting without maintenance cost and the comfort and privacy of a standalone home. Single-family homes in built-to-rent communities are becoming a more comfortable stepping stone on the road to home ownership. As a consequence, developers across the country are rapidly expanding these single-family rental housing places to keep up with the growing demand. So, like I tell investors all the time, I think your best bet if you want to rent out is to have a single family home. There's not as many of them. You're not competing with the big complexes. And in most cases, a lot of people would actually like to have a home to rent. So what builders have done and some investors have done is that they have built a whole subdivision of built-to-rent homes, is basically what I'm talking about here. So there are 13,591 new single-family homes for rent, which are currently under construction across the state. And so, so that's basically what's going on. A total of 110,727 single-family homes for rent are under construction across the U.S. in states like Texas, Arizona, and Florida are kind of leading the pack when it comes to that. Florida is said to increase our supply by 13,000, and Orlando is among the best metros for single-family rentals under construction, stretching the seventh spot due to the 3,085 houses for rent that are in the works that will become available to renters in the coming months or years. And then Tampa and Jacksonville missed the top 10, but they are working to add 2,000 new units to their existing inventory. And Northport is the only other metro in the state with more than 1,000 units under construction. So basically, that's basically what's going on. Let me see if it says basically here. I was just reading real quick to see, what if they told the total amount, because I thought it did, but it doesn't. So I thought that was something interesting. But there are those communities as you're driving around that you see them. So you see the apartment complexes going up. You might not see these built-to-rent houses, but I've seen them all over. And I think that they're a great option for people if that's something that you want to do, if you're looking for a single-family home. And, what a great deal for an investor if you own all these houses. There's all in one place that you've got your subdivision there, and they were all built by the same builder at the same time. And a lot of times they don't have garages. Sometimes they do, sometimes they don't. But the ones I've seen for the most part don't have garages, so you might want to rent from a regular owner instead of doing that as well. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Peterson from your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So, some other things that I wanted to talk about today is there is an article out there and it's debunking the 20% down payment myth. Now, the interesting thing about this is that it says that 62% of Americans say that 20% down payment is required to buy a house, and that is absolutely not true. And so 33% of non-homeowners say that not having enough money for a down payment is holding them back from buying a home. Then, you put that you've got the wrong information and automatically it becomes a problem, right? And so I don't want anyone to miss out because they don't know the correct situation in regards to that when it comes to purchasing a home. And basically the bottom line is that 20% down is something that has been around for an awful long time, that when you have that 20% down, that people always thought that that's what it was. Now, with 20% down and without 20% down, sometimes there are some additional fees that come into play in your payment, and that's either mortgage insurance or which they might call MIP, or they call it a couple of different names. But basically, the bottom line is that if you're getting an FHA loan, if you're putting 20% down, you still have some kind of an insurance payment when it comes to an FHA loan. Every FHA loan has that on it. So it doesn't matter how much you're putting down. Some conventional loans that might have 3 or 5%, depending on what your credit score is and some other factors that they look at, you may not have, you may not have any of that insurance kind of payment on that. So basically, when it comes down to it, you really need to look at what's going on and all of that kind of good stuff to make sure that you're actually getting what you're looking for. So when we're looking at loans and what's out there and what's available and that kind of thing, and what's the least amount that you can put down. And basically on an FHA loan, the least amount is usually 3.5%. And so that's what the number is for that. But there are conventional loans that you can put as low as 3% down. And if you get a USDA loan, which is the United States Department of Agriculture, you can put as little as 0 down on that. And if you're a veteran, then you can put 0 down on a VA loan as well. So there are options out there, without a lot of money. And like I tell people, if you're looking at, well, how much is 3.5%? If you had to put on an apartment that you had to put first, last, and security deposit, you're probably over 3.5% of what you would have to put down on a loan. So basically, when it comes down to it, there are definitely options for you. The other thing that is available out there is seller concessions or seller credits that are very popular today as well. And with that, that means that a seller is able to pay on an FHA loan up to 6% of your costs. So they can't pay your down payment for you, but you could get a gift letter from a relative potentially and get a gift from a relative. But there are closing costs, like you've got to pay your first year of homeowner's insurance. There are costs to get the loan. There are some stamps on the mortgage that are estate tax that are out there. So basically, all of those things can be covered by the seller if there's enough money in the deal, for the seller that they're interested in doing that. So basically, there's all kinds of things that are out there that you can do. But it's amazing that this myth exists out there. I mean, I've been doing real estate since 2005 and bought my house before that, and a couple houses actually before that, and none of those did you need to have the 20% down. Now, obviously, if you want to have the 20% down or you want to pay cash, then that's awesome as well. But I just want everybody out there to know, like I said, to be informed in regards to what's going on and everything out there. So if you want to put more money down on your house, you're obviously, that's not a bad thing. You're going to have a lower payment and everything when it comes down to it. And maybe that's what's important to you. So basically, that's something that you want to look at. And this other article that I have out here today said that buyers gain leverage as the market slows. Now, our market has been slow ever since the interest rates went up, but it's been pretty consistent through then. We've sold about the same number of homes and everything, but the market has slowed. And so when there was that feeding frenzy, which was probably like 2021, is when I'm going to say that was happening. And in that feeding frenzy, we were selling double the amount of houses that are selling now. But that was double of what it normally is as well. So what's happening or has happened is that the inventory has risen. So what that means is that in our market, that because we're in single family homes right at about the rate that you need to have in order to get, to have a normal market, which is between the 4 and 6 months, that basically, we were at less than a half a month's inventory at that point in time. So a house came on the market, it sold in hours. People were buying them without inspections. There were no seller concessions. And 80% of the people that bought houses regretted it. They said that they wished that they would have, waited a little longer, or they would have done something else in order to make things happen. So basically, we want to look at what's going on. And the typical U.S. home is right now selling for 1.8% less than its asking price. And that says that's the biggest discount in nearly 2 years. Basically, what I was telling you guys earlier in the show is that our statistics show that we're right at 98%. So we're right there with the U.S. average is basically what's going on. The typical home sale is taking 56 days to go under contract, which it says it's the longest span in nearly 5 years because we were in a crazy market and it just settled down. Now, if we're looking at what our Orlando stats are, let me look that up real quick, that our average days to contract is 77. So we're a little bit ahead of that overall when it comes to that. And more than half, 56% of the listings are sitting on the market for at least 60 days without going under contract, roughly the same share during the time than this time of 23 and 24. And basically that's down from the prior month when 61% of the listings were on the market for at least 60 days. So the housing market is slow mostly because it's expensive to buy a home, number one. And then the interest rate was at a two-decade high of 7.62%. Now, when you look at that and everybody's like, oh my gosh, that's doom and gloom and what's going on and, all of those kinds of things. But basically the bottom line is that when you look at interest rates overall, that's kind of the average and the norm over a 40-year span, that's an average interest rate. So it's really not bad. However, our prices are significantly higher, but, that's kind of a cost of living thing. Cars are a lot more expensive than they used to be and everything as well. So you've got to look at the whole big picture and what you can afford. So I guess the bottom line is what I'm trying to say is that I think that everybody needs to make an informed decision. So what that means is that if I were you, I would sit down with myself and I would go through and look at your specific situation to make a plan. And maybe it's not today that you're going to buy a house. And maybe it's, a year from now, maybe it's 2 years from now, maybe it's a month from now or whatever. But actually have a plan in regards to what's going to be best for you and your family. And that's what I think works out the best in doing that, in making sure that you're going to absolutely, get what you want, get what you need, and all of that kind of thing. So that would be my opinion in regards to the best thing I think everybody to do. So in order to reach out to us, you just call or text 407-566-2555. You find us online at centralfloridarealestateradio.com, and we will see you after the break. Welcome back, everybody. I'm Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I wanted to get into today a couple of other things that I ran into, and one of the things was it said 90% of the market saw fourth quarter home price gains. And home prices finished strong in 2024, but in the last 5 years alone, the median home prices have jumped 50%. And so we didn't, in Orlando, which everything is very local, but in Orlando, when you're looking at it, the home prices didn't jump a whole lot, but they did jump between that 3 to 5% is basically, and so I'll have to get you the exact figure next week. But we did go up, but we didn't go up a lot. But, some of these areas in the country, they went up a lot, but they didn't go up like we did in 21 and 22. So, but we are definitely, I would say, 50% higher than we were, like it says, than the last 5 years. Median home prices have jumped about 50%, and I would say that we are absolutely in that figure right on the money. So we just did it really quick. We did it in a year. And that's why I said earlier in the show that basically a lot of people are sitting out there with a lot of equity in their home. And so if you are in trouble, you don't want to, have that be a problem for you. Just get in touch with us and we'll let you know what your options are, because you've got a lot of them. And so we can, definitely work. Maybe you can even refinance it, with your lender that you're currently working with, and they'll let you do that. So there's a lot of options out there when it comes to all of these things. But another thing that's very interesting about Florida, and I just find it fascinating, that we lead the country in all cash home purchases. And it's a strong hold for all cash deals driven by retirees, investors, and competitive buyers in some of the state's busiest real estate markets. So basically, Palm Beach, West Palm Beach, had 49% of our all cash home sales, and Jacksonville is at 46.2%. But Orlando's at 40%. So, when you're going out there in there with financing and you've got a guy in cash, there's many times where you might not get the deal and you're going, that's a bummer. And if you are going for cash, you've got to know that 40% of the other people are going in at cash too. So a lot of times you can get some of a discount by going with cash, but it's not significant. It's not a lot. Maybe you're going to get 1 or 2% better, but you're not going to get like 20% better. And, so there's a lot of options, a lot of things that are out there that you'll definitely, want to do. But if you're getting ready to buy a house, and the other study is saying that the people in the Gen Zs, that they're kind of waiting because they want to make sure that they don't make any mistakes. And but there's things that you can do to prepare. And like I said, I think the best thing that you can do is you can sit down with someone like myself and go through basically to figure out, what you want to do or whatever in regards to making things happen. And, when you're looking at financing, if you're a 1099 or a self-employed person, there might be different kinds of loans that you're going to look at versus if you're a W-2 employee and everything. So basically, when you're a W-2 employee, basically, you want, and your credit score is below 680, you probably want to go FHA. If you're above 680, then you'll want to go conventional. So, and if you're out there and you're going, well, I'd really like to raise my credit score, then I think that that's something that you can work on and everything as well, that you will have options in regards to doing that. If you're a 1099 or a self-employed person, and you've got a credit score above 650, you might want to look at a bank statement loan. That might be something that would make sense for you. If your credit score is above 680, or below 680, you might want to go FHA. And if it's above 80, then you could, go conventional as well. But in order to get your credit score higher, here's just a few things that you can do in order to make that better. One thing is that you pay your monthly bills on time. Obviously makes sense. Secondly, thing is keep existing credit card accounts open. When you close accounts, it's not a good thing. You think it's a good thing, but it's not a good thing. So you want to keep your credit card accounts open. You want to continue to stick to a budget and build your savings. You want to return requested documentation properly. You're going to have to have access to documentation like your pay stubs, your bank statements, so your file stays updated when you're working with a lender. And then you can speak to your loan officer if you have questions. The things that you don't want to do when you're going for a loan is apply for new lines of credit or shut down existing accounts. This includes co-signing on a loan. I think that's one of the things that I've found over the years that a lot of times get some people into trouble is that they co-sign for somebody and they don't realize that that eats up part of your credit. And as a result of that, your ratios might be off, and those are regulated by the government. It's not like this bank's going to do this and another bank's going to do that. They're all very similar because they've all got the same standards that they have to keep, and that's been set up by the government. You don't want to make large purchases on existing credit or deposit large unsourced sums of money without consulting your loan officer first. You've got to do that. And don't deplete your funds that will be used for closing. Don't quit your job, change jobs, or do anything that could potentially reduce your income. So, all those things that I just said right there, they kind of make sense. But when you're out there and you're living life and you're doing something, you're like, maybe not thinking in regards to, what's going to happen and all of that kind of stuff. So you've got to just go ahead and set yourself up to win. And so that's why I gave those little tips and everything right here. And when it comes down to people say, what's the perfect time to move? What's the perfect month to move or whatever? And there is no perfect market. No matter when you buy, there's always some benefit and some trade-off. And that's not a bad thing. And if you're looking to move right now and you own your home, it's I think if you're ever trading a home, that's kind of the way that I look at it. If you're buying and selling, there's never going to be a good or bad time. You might have a trade-off on one of the sales and you might make more money. And then on the other sale, you might lose some money. So it's always a trade-off. There's not really this was better or worse or anything like that. So I always tell people you've got to look at the whole picture. I've got some people that I'm working with right now, and they definitely have a number in their mind that they want to get on their current house that they have. But I'm telling them that, hey, if you're going up to this house, which they're looking at increasing a house that has been discounted already by $250,000, if you have to lose supposedly $50,000 on your house, which you're really not losing, is it really a bad deal? I don't think so. And I'm working with another couple right now that they're doing a similar type of deal, and they're coming in that on the house that they're purchasing, that they're getting a $75,000 cut on that house. And so that allows them on their current house to have a little bit of room on it when they're doing it, and they're not going to lose money on their current house. They just bought it a year ago. They're going to break even because they put a little bit of money into it. They might be down maybe $10,000 or something like that. With all of the closing costs and everything like that that's involved, they're going to end up in a pretty good place. And so I think you've got to look at it from a win-win situation. What am I trying to accomplish? What do I want to do? And, if you look at it that I'm going to walk away with a lower payment when it's all said and done, or I'm going to walk away with X payment when it's all said and done, or I'm going to pay cash for this, and look at the net is what I think you really have to look at. And that's going to make it the best thing for you and for everyone involved. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we will see you next week. Have a great one, everybody, and enjoy President's Day weekend. Bye-bye.